Brandon Rogers and Trent Bradshaw, thank you for joining us. We got a market update. Today is October 31st. Happy Halloween. We're going to talk about some different changes that we've seen in the market. It's been a wild ride this year. Obviously, September was not a great month. October turned out to be okay, but what's really causing this? So we'll cover some of those aspects and give you some details around that. All right, Trent. So again, market's been fun. We've had some good days the past couple days, but I mean, what's really happening? What has been really causing all this?
Well, before we jump in there to touch on that, during bear markets, we will see small rallies.
Yeah.
The rally in October was actually pretty good. The month ended pretty strong in comparison. So it's probably one of the strongest months we've had in a couple years. So again, getting back some of those losses that we experienced during the month of September coming into October. The big question is, Brandon, will it hold? Yeah. And I don't think anybody really knows, but this is what we do know. A couple dates that are coming up, they're going to be important. We call it the Super Bowl because that's basically what the next 2 weeks is. On November the 2nd, 2 o'clock in the afternoon, we're going to get the rate decision. Probability says we're going to get 0.75% increases on the federal funds rate, which is pretty aggressive again. And then after that point, we've got November the 8th. What's happening on November the 8th?
Maybe this little thing called election?
Exactly.
Maybe?
We got the election coming up, midterms. It's going to be very important. What we're wanting to see is gridlock. Gridlock historically is a great thing when it comes to the market. Average rates of return on an annual basis during gridlock. Year after the fact, it's about 15 to 16%, so pretty impressive. That's what we want. Ultimately, though, on November the 10th, big day, they're going to report the CPI number for the month of October. Why is that important? Because that's really the barometer of what the Fed's going to use to measure and decide on what they're going to do with interest rates as we move forward.
And we got one more, right, after that?
One more on December the 14th at 2 p.m. in the afternoon, but on November the 10th, when the CPI number at 8:30 comes out for the month of October, that'll give the fuel to the Fed to make the decision of whether they're going to pivot, which become a lot more lenient on interest rates and maybe not increase as heavily in the month of December and months after, or they could be more aggressive based on that number. Well, the Cleveland Fed's nowcast right now has it at 0.7% for the month of October. Let's just say that's a little hot. So if it comes in at 0.7, the Fed's probably going to stick to their guns, and they're probably going to increase rates by another 50 basis points to 75 basis points in the month of December, which probably will push us more toward that 0.75%. Again, that will put a lot of stress on the overall market as we've seen in the past. And the question is, what is the language going to be like from the Fed? Are they going to lighten up? Are they going to continue to be tough in regards to inflation and where we're headed going forward from there? Even the core CPI number based on that nowcast is supposed to come in at 0.5%. That's 6% annualized year over year, and that's a long way away from the 2% that the Fed's targeting.
Yeah, and really what you're seeing is that, I mean, I think the Fed's done a good job about explaining what the rate increase is going to be, and the market, I think, kind of jostles around and tries to price that in. So when he comes out and does the rate announcement, that's one thing. But really, what the key is, what's his language? What he does, releases a statement after that, and then everybody just tunes into that, and then asks questions, and you just kind of hear how he answers those things to see if they're still got their foot on the gas or are they going to ease up. But like I said, we need some of that inflation data to kind of, it keeps going up and up and up. We need to see that kind of curve down. Yes, it'll still be high, but it means it's going in the right direction, and maybe what the Fed is doing is halfway working. But, again, that's just why this thing's so volatile right now.
Yeah, we got some news from Nick Timiraos from Wall Street Journal that kind of leaked through. It's kind of the Fed whisper. It sounds like the Fed may be tilting to get a little bit more lenient or pivot on the interest rates to where they're not as aggressive. And that sparked this latest rally that we've seen in the market over the last couple of weeks. Who knows? Until we hear the official statement from Jerome Powell, we don't know where this thing's headed. But those dates coming up, November the 2nd for the next rate hike. We'll see what the language looks like. The midterm election, and then the CPI report November the 10th. Those are going to be the near-term catalysts that we focus on in regards to the portfolio and what kind of changes we're making. But there is one more positive thing, if I can find something positive out of all of this mix, and it's corporate buybacks. So in 2022, right now, as of October 21st, and you'll see it on the chart here, it's a little over $1 trillion in buybacks that have occurred this year. It's the largest buybacks we've seen in decades. So ultimately, we think that will kick back in after this blackout period that we've had in October. So again, going into the end of the year, that could be a huge catalyst.
Yeah. So we've continually monitoring this information and all the news that comes at us. Did some changes. We did pull off. We still got a lot of defense in the portfolios, but we did get rid of the U.S. dollar type position to go more large cap quality in the portfolios. Again, we'll probably make some changes as we go through these 3 key dates just to see how the dust settles, from so to speak. But again, we'll obviously always monitor this, keep you up to date, and make changes when we need to. But again, it's a difficult time to navigate these waters because there's all these different events going on. And so, yeah, Super Bowl's coming at us right now.
So we're keeping tech down, large cap quality,
Yeah.
dividends like we've had in the past. We're going to stay the same. So if you got any questions or concerns, let us know. Shoot us an email, give us a call. Please join us on social media. Take advantage of our podcast and, of course, these video updates. And let us know if you've got any questions. Hope you have a wonderful week. Brandon Rogers, Trent Bradshaw, Bradshaw Financial Planning, and mind your money.